Good evening, all. Ira Epstein, and here we are with your Spider ETF market wrap-up. I'm dizzy from today, to be honest with you. What a day. It is Thursday, the 21st of September, 2023. So a bunch of banks today made decisions. We had today Turkey Central Bank up 500 basis points. You heard me. That's how much they went up on their rate. We had Norway and Sweden's banks both go up quarter point. We had the Bank of England sit tight, crossing their fingers that inflation is actually on the way down. We get the Bank of Japan coming next with their interest rate decision. They have been the outlier, staying down. And then the markets had to think about all that has taken place and what do they do with it. And what the market has done is, I'm so glad that I picked up a chart for us to look at, BND, and we'll come back to this in a minute, because that was the stellar performer today, negative. And that's what I was hoping we would see, some big action. That's why I picked these charts. I move at them and I try to guess which ones might be interesting. Maybe half the time you catch something like today, and it was a good one to catch. So what's the cure for these high rates that are never ending? First off, you had a breakout. Let's understand that. Anything over that 434 in the cash market was a breakout. And you have it. So is it going to 4.575? Is it a 4.5 now? 4.5, 4.75 or 5? That's what I meant to say. 2 quarter points more? It could. It could. I remember I had somebody that I read that I respect say 6% that it could go to. I don't know where the number is. But in order for it to go to 6%, here's what I think. You then have to tell me that high interest rates are not slowing down the economy. I'm not saying that isn't the case. Did you see the jobless numbers? That's another thing I think did the market in the stock market today. Not jobless claims is the right words. I am right with jobless numbers, but jobless claims, down 20,000. You're back to January, the second week of January's levels, which were the lowest of the year. So it's the opposite of what the Fed thinks is going on. This job thing's got everybody scratching their head. Everybody's still hiring. We know that there's 250,000 going to be hired from Amazon, 100,000 from Target. And guess what? You may be getting back the Writers Guild. They're very close to a deal. Nobody's spilling the beans yet, but it's close. This is good. And of course, you have the United Auto Workers determined to punish the world, and they're going to put their workers out on the street. That's what I expect. I expect that tomorrow, Fain will say, "Nah, we're not even close. They're not serious, and we know that. More going out." Well, it's not only him that's putting them out now. It's the big three. They have no choice. If you remember how this all works. Parts come in from all angles. They don't stockpile them. They move through. If you can't make a part here that goes into something there, you can't assemble, and sometimes you can't even do in that one factory. You got to get the parts to put together a transmission. So things start shutting down. As that happens, copper comes under pressure. Steel will come under pressure. Workers come under pressure. The rolls will go up on the jobless claims. They'll start climbing sooner rather than later as these people. I don't know if they can get a jobless claim. Would you write me and tell me if the union's paying them the $500 a week? Let me know that. I'd like to know. I have no experience with a jobless claim personally, so I just don't know how that works. Let me know. And you've been really good at that. So here's what I was counting on. I was counting on BND breaking down. That's why I brought it up. Wanted to show you all the things that makes this up. And if you don't think that's a breakout to the downside, fine. Now, ultimately, this gap is going to be filled. If you don't think so, great for you. I think it will ultimately be filled. Where's the market now? Well, anybody that is long, anyone, is underwater. Agreed? As prices keep coming down, this goes all the way back to May, and some of these people are underwater pretty big. It's down from 74 to 70. That's a big move in this. What about where we might go? Well, you're at the Bollinger Band. So what do I think a professional trader did today? He covered some shorts. The trend has been down. The resistance was set at the 18-day average of closes. The first objective is there, and you're not yet embedded. did we embed on the close? Both numbers were under 20. Both the day before were under 20, both under 20. So now I have 3 days in a row. I did not have 3 days in a row coming in today. So on the third day, what do I think the pros did? I think they lifted some of their shorts. They looked late in the day and said, maybe I'll keep some because I'm embedded, and they'll want to sell the rally, probably that fills the gap until the red line closes over 21. As a chartist, that's what I think makes sense. Rivian, sinking with other auto manufacturers and the like, oversold down into, we hit today 21.52. The lower Bollinger Band number is 21.26. That's where I'm going to look for the support to be coming in. Not bullish. That's where I think the pros will cover shorts if they are short. In UGA, now you're bearish. Lower highs, lower lows under the 18-day average. Until you get over this high, you've opened up the door to possibly get to 68.97. Momentum down, trend down, bias down. I'm in the bear camp for the moment here. XLF, very difficult market. You've gone from upper band to lower band in 5 days. Wow. Unbelievable. So the financials got smashed. That's the right word. Got smashed off the high interest rate play. This is all today, the delayed reaction. Didn't happen yesterday. It happened today. And what do you think I'd be doing? I'd hit you in the elbow with my elbow into the rib and say, if you're short, I don't know if you'd be short. Don't you think this could be a spot to lift something off the table? You're not embedded. You're down to the 200-day average and the Bollinger Band. You might get down here, but I think you got to grab something. And you tell me, nah, the sky's the limit, and I get it. XLI, what we have in this market is new bearishness. Now. First challenge of the 200-day average in one heck of a long time. Ira doesn't like that going short or staying short under the first challenge of a major moving average. I don't like being long as the market gets over it right away. I want to prove it can stay under it. Therefore, I thought when it failed at the 100-day average in the Bollinger Band, and I said it here, it might be headed down for the 200, because if it's not going to hold that, that's the next support. After it's already hit the Bollinger Band, that's where you're at. Let's see if it gives you a bounce. It is not a buy. Short covering is very different than buying. Disney, sell a station, do something. Make it move, but it's not. It's not trending. It's just very happy, sitting flush, as everything around it is in disarray. The consumer confidence. Well, as interest rates keep going higher, why would you want to be long this? I mean, the fundamentals, I don't have to be a genius. Everything that you look at, the consumer is going to get himself tapped out here. Interesting. I watched a person today on CNBC that I learned something that's unbelievable, and I say it because of home builders. Rome, that's the app. And I watched this gentleman who was brilliant. I did not know that, let's assume you went and you got an FHA loan, okay? And it's government-backed under the certain cap. It's not a jumbo. Do you know they're all assignable? Did you hear what I said? I didn't realize this. I think I understood what he said. If I'm not, I stand corrected. But nobody's telling me that. So if you got a 3% mortgage, just to give you an idea, and you want to sell for some reason, and the guy who wants going, I can't afford 7%, and you're in a situation where you don't need that 3% mortgage. You're going to your country home, it's already paid for, you're retiring, whatever. You got a way to sell this to that guy. Why is nobody saying this but him? And he went on to say why his database is unique, because they have all these records and nobody else does. And the brokers have to start going to him so they can say, hey, this has got an assignable mortgage. Whoa, that's a game changer. I don't know why more people aren't picking up on that. I'm so busy during the day, I listen out of one ear and I'll go, whoa, what's that one? And I have different sets going. It's crazy. Lower highs, lower lows under the band. Now, I wouldn't be telling traders to go short that, but you know that this type of environment's not friendly to them. It can't be friendly to them. But here's something different. But that's a home builder. It's not the same as an existing home with a mortgage. So this person, and I told you, they have a way to come in and buy down for a year or two rates with you. Talk to home builders. They can do this. In the end of the day, it's either some of their profit, some more money from you, but it could be done. Energy sector, coming down still. Okay, but you're getting oversold. If it can reach down, and I have my doubts it's going all the way here, wherever that Bollinger Band is the next support. The reason I have my doubt, this is part of the reaction of a one-sided event that comes and often makes a 50% correction or so, finds its footing, and if the fundamentals haven't changed from there, it regroups and starts up again. And I don't think OPEC's given up on anything. In the gold market, I just don't have number one, I don't see anything on the chart. It's not a field. There's nothing here. Lower low, higher high, narrow Bollinger Bands, keeps coming back to the 18-day average. More important, the big interest rate increase isn't doing it in. That's bullish, not bearish. Recognize that. In SLV, you tried breaking it down. It's right back into the resistance. You close over 2177, and I actually get bullish. I jump onto the bull camp with that chart. Do I have a signal yet? No, I don't. COPX. I have not been friendly copper. I've been vocal about it, and I was proven right today. Now, as big a bear as I am, no, this is where you cover shorts. You're not embedded. Bollinger Band hit, out you go. If you haven't taken my Bollinger Band course, shame on you. I'm going to play it at the end of this. Take the course. Learn the importance of this. I could take the name off any of these charts, and I do. It's patterns. When I teach and I'm redoing my charting course, I'm going to have the name off the charts. And then I'll put them back on so you can see the chart that we were doing, because I don't want you caught up in the market. I want you caught up in the chart. There's a huge difference between the two. If you did that on charts off your trading, I think you would notice your trading comes in a lot different because you think too much. In TLT, I am bearish. I'm bearish on BND. But why would I tell you here to go short under a Bollinger Band? This is where you cover. Am I going to tell you to sell rallies? Oh, yeah. Oh, yeah. There's a way to do it, and that's what I think you have to do. In the morning, I'm going to be all over these charts in my subscriber video if they do certain things and telling my traders what to do. And you'll know what that is if you've taken the course. Depends how the day's range starts out. In UUP, I'm still bullish the dollar. Embedded reading, why come out of the market? It has not hit the upside target. You come out, if the red line closes under 79, that's a long way off. On pullbacks, I think the pros are still buying the dollar until that occurs. And in FXE, I think they're selling the rallies. You didn't get high enough to do it. I think they'll do it tomorrow until they lose where that number closes over 21. So as I said, Bollinger Band, you see me talk it all the time. Do you know how to work with it? Take a look right here and go with that. I'm Ira Epstein. By the way, to go to the area on our website where the Bollinger Band is all explained, move your cursor up here. That'll take you right there. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.